Hi everyone, this is Devins Financial, a weekly stock analysis newsletter. Today is December 4th, 2016. Our newsletter is for your informational purpose only. We're not responsible for your gains and losses. Let's take a look at the current market trend and our strategy. US stock market, the uptrend is under pressure. Natural resource and material sector remains strong, but the high tech is weak. I currently reduced the long position size and rotate into the natural resource and material sector. Let's take a look at the indices and the charts. German DAX index remain in this trading range. NASDAQ pull back, and you see on the down days volume is high. That put market uptrend to be under pressure. SP 500 is same. On the down days, the volume is very high. So this also in this pullback mode. But the uptrend is intact. It just, the market has gone up a lot in short period of time. It's natural for the profit taking and pull back a little. Gold is still in a downtrend, but gold may be in a rebound mode. Silver has started the rebound. It looks like it found the bottom here and started rebound. But the overall trend of gold and silver is still down. Gold mining stock index also try to consolidating here and try to find a footing to rebound. Crude oil has turned around. Crude oil has a very strong reversal right here. And on Wednesday, crude oil has a strong reversal and keep going up now. Crude oil ETF is the same. On Wednesday has a big jump, and Thursday and Friday keep going up. Energy sector ETF. Energy has rebounded out of this channel, this uprise channel. This is a slowly going up channel. Energy has going up above it, break out from this channel. So it started another phase of going up. So energy is strong right now. China-Asia market still in the uptrend and consolidating last week. China ETF, this is a little bit looked a little bit better because it's rebounded above the 50-day moving average. Although Friday has a pullback, we should see whether this FXI can turn around going to the upside. Biotech pullback very quickly. U.S. real estate downtrend. This is a arrow, the airline and aerospace ETF. Airline sector is very strong, still in the uptrend. Although last week pulled back a little bit, but the overall trend is going up. Copper ETN. Copper has break this trading range, break this $26. This has been resistance for a long period of time, and copper break away from this. So copper is in the uptrend. Although last week it pulled back a little bit, but the overall trend is still up. Social media ETF downtrend. Solar sector downtrend. Utility sector downtrend. Those trend has not changed. FAS, that's a financial sector, 3 times correlated with the financial sector. This is a leveraged ETF. And be careful, leveraged ETF is very good for doing the short-term trend if you get the direction right. For the long-term holding, leveraged ETF is not good because it's using the options on the line to do the leverage. So long-term, you have some kind of a time decay effect. So overall, if you are holding a sector or ETF for a long period of time, it's better to do the straight one times non-leverage ETF than doing the leverage. Leverage ETF is very good for short-term trading. FAS right now is in the uptrend. Nothing changed there. Semiconductor leverage ETF 3 times, and semiconductor pull back very quickly. So you can see if you don't get out quick enough, and that can lose a lot of money. So leverage ETF, when they turn around against you, the best thing to do is get out quickly. So you have a very tight stop order. So as soon as it hit certain point and you get out automatically. So that's a way to trade leverage ETF. However, semiconductor right now pull back around 50-day moving average. So we should see if SOXL can find support along the 50-day moving average. So if it can find the support, then this would become a buy point. So in the past, semiconductor has found support around this 50-day moving average. So we should see. SPXL is a 3 times SP500 index ETF. So this ETF is 3 times correlated with the SP500 index. Right now, SP500 index is pulling back, so we have to be very careful for holding this leverage ETF. I will not hold it. In fact, I have already stopped out of all my leverage ETF and took the profit. So now I'm looking for the next entering opportunity. TNA is a 3 times small cap ETF, so it's correlated 3 times correlated with a small cap index. Right now it's also pulling back. So all these indexes, most of them are pulled back. Now let's take a look at the stocks, and there are 2 lists of stocks I'd like to share with you. The first list is a stocks that's in a buy range. It means a stock is within 5%. The buy range is within 5% of breakout pivotal point. And so Celgene, CELG, and the first price 118, that's a buy point, that's a pivotal point. Second price $123.9, that is a buy range. So if it's it's below $123.90, then it's in a buy range. Same with the other stocks, Jack in the Box, MLM, VEEV is another biotech. Well, VEEV is actually a software in the health sector. So it's not a biotech stock, it is a software stock, computer software stock, but their software is specialized in the healthcare sector. Anyhow, all these stocks are still in the buy range. Now, the second list of the stocks out of the buy range, they are more than 5% above the pivotal point. Broadcom, AVGO, again, that's a pivotal point. DPZ, the most recent buy point is a 50-day moving average. FCX, buy point, pivotal point, $13.69. Right now it's beyond the buy range. The buy range is up to the $14.38. NUE is another one. NVIDIA is another one. Let's take a look at the charts. Celgene is a biotech stock. 10 cents above the previous high, so it's a $118. That's a breakout pivotal point, and buy range to $123.90. So right now it pulled back to that buy range, so it's in the buy range. Same with the Jack in the Box. Here is a breakout pivotal point, 102.78. There's a discrepancy here. Stock charts use the closing price to mark the label here, but the buy point is using the high, the highest price of that particular day, and that's 102.78 cents. So the buy range is up to $107.91. We're barely within the buy range. MLM, this is a building material. This is in the building material sector, and also in the buy range. Again, this marking is for the closing price of that day, but that day high is a little higher than that. So anyhow, use the high of that particular, it's making a base here. So you go back to look for the high of this point and find that high. That's the breakout pivotal point. So within the buy range. Viva, VEEV, Viva Systems. This is in a software stock, but it's in the healthcare sector. So this one, actually, we use the gap up open price right here to be the buy point, and then 5% above that buy point. So right now, it's stock actually pull back to close that gap. We should watch this stock carefully. Sometimes the gap up can fail. When they come back, close the gap, if it continue to go down, that's a bad thing. But if it can remain above this gap, then it's a good thing. So we should watch this carefully. If stock rebound from here, then this is a buy point. This is a buy opportunity. But if it doesn't rebound, it closing the gap and then come to the low or prior to the gap, then that's a stop place. You should get out. Those are the stocks in the buy range. Now, those are the stocks out of the buy range. Broadcom, and this is Broadcom has not break out yet. It's still making the base. $178. That's actually, it's right here, high of here. Or you use high of here, $179 right here. So the stock is still in this flat base. The good thing about it is right now it's to the lower part of the flat base, therefore, and also close to a 200-day moving average. For the aggressive investor or aggressive trader, you could consider buy the stock right here, but use the 200-day moving average as a stop order, $159.55. If the stock fail to hold that low here, then you can stop out. The stop, it's a small loss to get out. But if the stock goes back up and has a potential to break up from this flat base, or you can just sell on the top range of the flat base. So stock obviously right now is in the trading range of this flat base. Domino Pizza, DPZ, buy point is a moving average, a 50-day moving average, and right now it's too high. FCX, Freeport, McMoran. This is a material sector, and right now out of the buy range. So the buy range $13.69 all the way to $14.38. Pivotal point $13.69 right here. And if it's within $14.38, that's a buy range. Right now it's above that, so it's out of the buy range. Nucor, NUE, breakout pivotal point is right here, and the high of this day is $57.08. So 10 cents above that high. That gives us the buy range. That gives us a breakout pivotal point. Now the buy range is 5% above that pivotal point, which is $60.03 right here. NVIDIA, obviously, no buy point. This stock is very strong, and most recent buy point would be rebound from the 50-day moving average. Now it's too high. Even if you use the gap up open, and here, that is more than 5% of this gap up open. So no buy point. We just have to wait for the next opportunity. That's a list of the stocks. What to do in this market? I would continue long, but I would stay long in the strong sectors. I would reduce the long position in the weak sectors or get out completely. That'll be all for this week. See you next week.